So good morning, everybody, and good afternoon, depending on your time zone. We are very happy to do this webinar together. This is second year. We organize something like that in the cross economics world between India and Europe, and in this time, particularly about Italy. And I myself, I'm Luigi Belluzzo. I'm founder and managing partner of the firm. And I'm more than happy that with Lakshmi and the other Indian friends, we are able to do regularly this webinar, which is also a way to check and see what's happening in the India and Italy world. What is very important, and then I go on, is that this webinar is in a perfect timing, it seems to me, because our Prime Minister Mario Draghi and your Prime Minister Modi, they just met a couple of times actually, and so relationships among countries are really strong now, and we are happy to share the greetings. And actually, I believe that in Italy is also our only European hub for the EU. And last year we had, for a seminar like this one, Ambassador De Luca participating to this. Today it was engaged by spiritually is with us, but not only spiritually is we have Mr. Francesco Variale from the Italian embassy. So I leave the floor to you, Francesco Variale, please.
Thank you very much. I would like to say hello to Ambassador Malhotra and to all the guests, and to thank Belluzzo and Partners, the Italian India Chamber of Commerce, for inviting us and for giving us this opportunity to share some ideas and to introduce this important seminar. As Ambassador Malhotra already told, and also you already told, this is a very important, very unique momentum in the relationship, in the economical and commercial relationship between our two countries. Not only because of the important meeting of our two prime ministers, it was the first in person of Mr. Modi and President Draghi in 1 week ago, but we had during in the entire year a lot of occasions of discussion between the two governments on the economic relationship. I would like to remember also the Economic Commission in July between our Minister of Foreign Affairs Di Maio and the Minister of Commerce of India, Minister Piyush Goyal, who came again in Italy twice after this meeting. So there is a very positive momentum. And I would like to say that also in the pandemic period, we had the opportunity of increase the relationship between our two countries. For example, regarding investments, also in the last year, that was a very, everyone knows, a very bad year. There were many Italian companies that decided to invest or to make new investments in India. I would like to remember that India continued. There were more foreign direct investment in India also in this period. So I think that the moment is very positive, and also is very positive also for Indian companies that are looking to Italy. As you know, we in the as Embassy of Italy, as the Italian system in Italy, we have not every day, but many requests from Indian company to who are looking to the Italian market. Of course, Italy is seen as in the center of the Mediterranean, but is seen as the focal point in the middle of the European Union. That it's a market of 500, 600 consumers. So also for Indian companies that are more and more able to look at for foreign markets and to look at for important investments abroad, Italy is becoming an interesting country. From this side, we are as embassy, we as government, we are ready to help Indian company who wants to come to Italy. And I think that these kind of seminars, these kind of also virtual seminars, are of course the good occasion to show all the possibilities that the Indian company can have in terms of, for example, fiscal help that now are more and more important. And I would like, finally, I would like to remember at the end of my speech that we are, Italy is will face a very important period of, hopefully, of growth, but of economical reforms with the PNRR. That is the new plan, is the European founded recovery plan. That it will give everyone hopes it will give a big boost to the Italian economy, and it will be an occasion also for Indian companies and Italian companies who want to cooperate together on our market. Finally, I have to say that we are very happy to see that there are many occasions in which Italian and Indian companies cooperate together to look at other markets. This is an important field in which we want to work on, and we really hope that there will be other opportunities in the future. So I finish also thanking on behalf of the Ambassador De Luca that, as was mentioned, he really wanted to participate, but at the last moment he had an appointment with the government, the local Indian government. So I really thank everyone, Ambassador Malhotra again, and all the other guests. And I really hope that this seminar will be very fruitful. Thank you very much.
Thank you, Mr. Variale, for your kind words. And actually, our firm, together with Lakshmi Kumaran firm, we are committed to give at least once per year this kind of webinar, because it's quite convenient for the people attending, you know, to be updated. We believe that legal tax structuring for inbound and outbound, it is our job, of course. And we need, we believe that to serve a community of entrepreneurs, which at the end is a community of citizens, and with the two governments cooperating, even the law firms like us shall prepare to deal with the PNRR, the European Funded Recovery Plan the European Union gave to Italy is very important. And as I said before, we see Milan and Italy, but the whole Italy as a hub for the whole European market for Indian company. And we have already some experience with clients, with joint venture between Italy and India, looking after this kind of opportunity. So the webinar will be a little bit technical, but we have first a couple of, scenario presentation from Claudio Maffioletti from the Indian Chamber of Commerce of Italy, which gives also the sense of these increasing numbers of cooperation between Italy and India. Please, Claudio.
Namaskar, good afternoon, and good morning to everyone. It is, as usual, a pleasure to attend these webinars. We did one last year in collaboration with Belluzzo Mercanti and Partners and Lakshmi Kumaran. It is indeed a need of the day to keep updated all the companies in India and in Italy interested in their respective markets as the pace of reforms is increasing, and there are always novelties and new elements to be kept into consideration whenever there is an interest from both parties, from both countries, to invest in the other one. As Indo-Italian Chamber of Commerce, we have a specific point of observation from India, since we are an Indian organization recognized officially by the Italian government. We exist since more than, this year is actually our 55th anniversary. So we exist since 55 years. We have 5 offices in India, our head office in Mumbai. And somehow we are the point of reference and the common platforms, not only for the Italian companies that have invested in India, but also for all the Indian companies that deal with Italy, either through investment or by importing, distributing, and selling, retailing Italian products. I would like to share a few slides on the presence of Italian companies in India. We have approximately more than 600 Italian companies that have invested in India with a total stock investment of approximately 2 billion euros. In terms of investors from Europe, Italy is the second one after Germany in terms of numbers. In terms of investment stock, it is third after Germany and France, because France has typically bigger investments than Italian company. Most of the Italian investments in India are concentrated in the Western region, Mumbai and Pune. A significant amount is also present in the northern region, in the Delhi area, and in the satellite states, and a lesser presence in the south, Karnataka, Tamil Nadu, and in northeast. The sectors in which Italian companies are present are traditionally the ones in which Italy is stronger in terms of foreign investments. Machinery and equipment is typically one of the best representing the presence of Italian companies in the world, and India is no exception, followed by infra construction and building materials, automotive and components, and then furniture, energy, fashion, administrative, financial and business services, and then so on with other sectors. The modality that Italian companies have chosen whenever they invest in India is typically, and for the majority of the cases, more than 50%, as a direct 100% investment in India. So there is 100% ownership by the Italian company of the Indian subsidiaries. But there is also significant amount of Indo-Italian joint ventures, approximately 160, which accounts for approximately 25% of the total investments of Italian companies in India. The rest is either branches, rep or project offices, industrial, financial, technical collaboration, and some other kind of presence of Italian companies. As I said, the majority of the companies are present in the Western region, Maharashtra and West India, Mumbai and Pune. The rest is distributed in the other areas of the country. And this is the breakup of the investments of Italian companies. I also take the opportunity to elaborate a little bit on the opportunities as far as some specific sectors are concerned. Energy transition, clean and green economy have been at the forefront of the strategic priority of the European Union, and after not only the last G20, but as both Ambassador Malhotra and Councillor Varriale have pointed out, this has been a recurring topic on the various meetings and discussions at an institutional level on how to increase the collaborations between Indian and Italian companies in the domain of renewable energy and energy transition, green economy and circular economy. There is a huge potential. India has some very specific and strong assets, and Italy has some distinct know-how that can be shared with India. Mega food parks have been mentioned also as one of the next frontiers of possible collaborations and new investments between Italy and India. Specifically, this applies to the entire value chain. So from fresh products and fresh produce to agricultural machinery, food processing, cold chain technologies, food packaging, because there is still a significant amount of product in India that is not processed and which is not properly conserved and distributed. And again, Italy is one of the worldwide leaders in these areas that can make available know-how and technologies for the Indian growth in this sector. Automotive and electrical vehicles, this is kind of traditional area of collaboration between Italy and India. There are many Italian companies, as we have seen, which are present in the Indian market, yet the new frontier and the huge potential is offered by the transition to electrical vehicles, two-wheelers, three-wheelers, four-wheelers. There are significant and massive investments by Indian company, by international investors in these sectors. And I live in India, and I can tell you the number of electrical vehicles which are available and which are visible on the Indian roads is increasing on a monthly basis significantly. So this is an area in which, in terms of auto components, technologies for the production of the entire value chain is extremely interesting. Another area in which we see a significant potential, and there are many Indian and Italian companies entering into collaboration, is the field of cosmetics. Italy, it's not very well known, but it is one of the leaders worldwide in terms of skincare, hair care, oral care products. And India, again, offers a huge market, and there is a need to diversification of products, which needs to be tapped into. So these represent the 4 sectors in which we see a fresh and a renewed level of interest and traction of collaborations between Indian and Italian companies. That doesn't mean that the other traditional sectors, made in Italy products, food and wine, or furniture and design, fashion, or as Ambassador Malhotra pointed out, railways and interconnectivity between cities, those are somehow already established sectors in which Indo-Italian collaborations can only increase. So I would finish here with the slides, and I'll give it back to you, Luigi, to take this forward, and obviously available for any query the attendants will have at the end of the webinar. Thank you.
Thank you, Claudio. As always, it's very useful to see also the quantitative dimension and the qualitative investment between inbound and outbound. So now we move to a more technical section, as I said. So we just changed it a little bit, the program, to let everything going smoothly. So now is the time for my friend Lakshmi and my friend Vasudevan, sorry for the Italian pronunciation. So Lakshmi, to you and to your colleague, we have 20 minutes outlook of what's going on under the legal and tax world in Italy. And then after your section, Sanjay Malhotra will speak on other issues. So please, Lakshmi, to you.
Good morning to Her Excellency Nina Malhotra, and also Mr. Variala, and all others who are present in this panel. Ours is a law firm, about 400 plus lawyers in about 14 cities in India, across India. And we mainly deal with corporates. And we do have a number of clients from Italy, their subsidiaries and joint venture partners. And we have been helping these corporations to comply with the law in India, and also to exploit the opportunities in India. And when I met Luigi a few years back, one thing which came up for discussion was how these 2 law firms can act as a bridge between the corporates in both the countries to go for cross-border investments and cross-border trade. And from that time onwards, we took over, and then last year we had a webinar like this, and then second year continuing. I suppose after the pandemic is over, then we will conduct actual physical seminar in Italy, and also a physical seminar in India for the benefit of the investments made by the corporate cross-border. Since this being made as a technical seminar, basically, we would like to keep the entire thing at a very high level, not getting into the minute details. But at the same time, some minute details would help the industries to look for new opportunities. And therefore, I will try to strike a balance as far as the overview as also the street view together. As you all know, as far as the demand in India is huge with the population, the demography, and with the area. And therefore, there is a lot of opportunities for many companies for both investment as also trade. When we are talking about investments and trade, as Ambassador was mentioning, that lots of difficult areas have been simplified by the government. And because of this, the ease of doing business is definitely improving day by day. And what we are also seeing from the bureaucracy is to help the industries to set up, because they realize that it definitely gives a lot of opportunities for the employment and others. Apart from other taxes are being collected by the government. What I wanted to mention at this point of time is that when a person from Italy or a corporate start investing in India, what are the things which they can look for as far as from the Indian government, so that their investments or the manufacturing in India become profitable and they do not bleed by investing in India? That's, I think, a theme we are going to talk about. Obviously, we are going to talk about the compliance of various laws, definitely. Unless we know the minute details of those fine prints in the law, which are actually helpful to the industry, we may miss them. My idea is basically to highlight those fine prints which will help the industries to set up and grow exponentially. Whenever a person or any corporate invests in India, the first question may ask, yes, there is a manufacturing setup in India. There are very attractive propositions. What if exporters from other countries, say from China and other countries, start exporting goods into India, what I am going to manufacture at dumped prices, and then I may not be able to sell in the market, then what will happen to me? For that, our answer is there are very strong measures which are being imposed in India to remove the unfairness in the cross-border trade. That is the first time we're going to talk about this anti-dumping laws, how it is going to help the investments in India. The second, apart from meeting the demand in India, can the Indian enterprise, can it start exporting out of India to various other countries, both in the West and the East? And if so, are there any government support for type of exports? That we will definitely be dealing with it. Third, what are the measures which the government is providing to ensure that the push for manufacturing in India, Make in India program, how that whole scheme is being evolved, that we'll be dealing with separately. And as a tax lawyer and a corporate lawyer, every time an investor comes in, after about 10-15 minutes of discussion about the possibilities, he would ask, Lakshmi Kumar, tell me about taxes. That's an important aspect. And I must say, the government of India has done a phenomenal job in slashing, I won't say lowering, slashing the corporate rates and the remove the various difficulties in between. And that is relating to dividend taxation and also the pain points in meeting the Indian tax administrator in resolving an issue has been taken away completely. And the entire thing is now faceless. Entire thing is done by the portal. You don't have to meet any officer. It is only by correspondence, by emails. So that is one of the important things. And time permitting, I will also touch upon the free trade agreements which India and EU is now back in the table, which was suspended in between. It is back on the table. If you have some time, we can discuss that. Luki, I'm aware of my time. I will definitely stick to the time. Don't worry. Coming to the trade remedies, as far as India is concerned, it is an active user of a number of measures like anti-dumping duties, countervailing duties, and safeguard duties. As you all know, anti-dumping duties are imposed whenever exporting countries, exporters are exporting at dumped prices causing injury. Therefore, any Italian company making investment in India, if that particular company's products are going to be affected by dumping, you can definitely appeal to the Indian tax the administrator, and he would provide the investigation, and at the end of it, actually imposes anti-dumping duties, which will give you the total protection to the goods manufactured by you, and the Indian market is effectively fully protected for you. Same with the position of countervailing and safeguard duties. In fact, just to give the statistics, India is one of the major users of this instrument of anti-dumping. In 2017, if you look at the initiation, about 39 initiations took place, and 35 measures have actually been imposed. In 2018, about 34, and in 2020, you can imagine 64 investigations started. That means the government is serious that any investor in India, when he is manufacturing goods, if he is going to be threatened by the dumping imports into the country, government of India is going to protect you. You don't have to worry about that. And the other one is a simple example. I'm just skipping that. I can just skip that because these are various types of products on which anti-dumping duty has been imposed. This is one facet I thought I will mention to you. Next. I was mentioning, apart from the market in India, which itself is a huge market, about 1.3 billion people, at least more than 550 million people are in the middle class sector, where both husband and wife they earn, and therefore there is a big buying capacity for this volume. I think Italians may not even understand what exactly the meaning of this volume, unless when they come to India and see the heads, they won't even understand what exactly is the volume of people available here. Here, the government provides, apart from manufacturing here, when you are going to export the goods outside India, there are lots of measures which are WTO compatible, very innovatively provides the incentives so that the exports become competitive. You are able to sell in the competitive market in the international market. And here, the very many tax reforms have been given, plus also tax incentives, which are, as I mentioned, WTO compatible. For example, you can import the capital goods duty-free, manufacture the finished goods, and export the finished goods. Certain commitment. You can sell on the local market also. There's no difficulty. Similarly, if you are going to import goods as raw material component parts, manufacture the finished goods and export, the imported goods are totally duty-free. And very other types of duty drawback schemes are being given. And there are situations where the manufacturing process involves certain taxes elements which are hidden elements, which are not actually available as a credit. To take care of those, the new scheme has been announced by the government to provide the refund of those hidden taxes that are also given, so that your products become competitive in the international market. That is the one. Next one is the manufacturing in India, called Make in India, and manufacturing push. India did a very interesting thing. What they did was, how do I make the manufacturing in India attractive of the finished products? So what they did was, available duty rates from the customs at the finished goods level, they kept it high. At the raw material component part level, they lowered it. So therefore, you are encouraged to import the component parts and the raw materials, manufacture the finished goods. If anybody wants to import the manufactured finished goods itself, then you will have to pay a higher amount. Therefore, you get a higher protection as far as the manufacturing is concerned. That is a very innovative way of doing things as India is concerned, and it did excellently well. And that is why you would see and find large-scale manufacturing of mobile phones and electronic items and computers, etc. They started because, and including automobiles. All those things are because keep the higher rate of taxes for the finished goods, lower the taxes on the components and raw materials. And I have given the examples of various industries where these have been introduced. And I selected those industries which will be interesting to the Italians, because I know Italians are involved, and in fact, they'll be interested in knowing this. I was just listening to Mr. Claudio's presentation, and I anticipated this because I did some research on what are the industries where Italian will be interested. I picked up only those here. There are many more. I just wanted to give this snapshot on this. Next one is regarding the free trade agreements. India, as of now, has about 19 agreements in force, free trade agreements with different countries in Asian and African countries. Now, utilizing this, if anybody is investing in India, if they want to import certain component from these countries, they can come duty-free completely and no other commitment. We can manufacture and sell in India, no difficulty whatsoever. Now, currently, India does not have any treaty with Italy or EU. India's biggest beneficiary is the EU GSP program. India is the major beneficiary. Now, as far as India is concerned, since EU is India's third largest trading partner with more than $62 billion, or euros rather, for the trade in goods, which again totally about 11% of the trade. And many European companies, including Italians, are present. If I just mentioning, I just heard with a lot of interest that more than 600 Italian companies are present in India. It was nice to hear that, Mr. Claudio. Now, what exactly is happening as far as the free trade is concerned? If you come to the next slide, in 1994, EU-India Trade Subcommission was established under the Cooperative Partnership Agreement. And it took some time. In 2007, negotiations for the comprehensive FTA between EU and India were launched. It is not merely trade, it is much more than that. And negotiation went on. Of course, the negotiations are not overnight. It is not like two businesses sit down and then do. Even in the businesses, sometimes it takes years. And two countries with different pulls and pressures are necessarily to be there. Then what happened is 2013, the negotiations were suspended following the difference in market access system of the key items like your automobiles, wines and spirits and dairy, etc., etc. And from India, movement of professional was one of the key items. Now what happened is in July 20, 15th India-US Leaders Summit, the two sides agreed to explore the possibility of renewing the talks of the trade, and they wanted to establish a high-level dialogue with the same. In 2021, re-initiating discussion has taken place. Now is the time. Both, I'm especially addressing Mr. Claudio. Both Italy and India, we must sit down and then find out what are the goods you are interested in asking for the early harvest. What type of duty rates have come down? These are the things. This is a time for us to sit down and then make a presentation to the government. And I'm sure that the government will sit down and then negotiate those things. And that is where I think Indo-Italian Chambers of Commerce can play a phenomenal role. And Claudia, I'm telling you, I will offer all the services to you. Don't worry about that. Whatever expertise available to me, whatever knowledge I have gained till now, last 45 years, my practice of law, and the huge clientele, cross-border, the cross-industry experience, I will make it available to you. The whole idea is we must make this particular trade agreement a success. And I'm with you. I am now going to stop here myself. I don't want all of you to get bored only with one person talking. My colleague, Mr. Vasudevan, is an expert on taxation, especially on the income tax. He is going to talk about the rate of taxes available and incentives available under the direct tax scheme. Over to you, Vasu.
Thank you. Good afternoon and good morning to everyone.
Maybe it's me, but your voice is very low.
Is it better now?
Now it's better.
Much better.
Try to stay in 7 minutes, 7 minutes. Up to you. Good.
Okay.
Go.
So as Mr. Lakshmikant was mentioning, whenever somebody is trying to invest in India, I think tax is one of the most important considerations. And it is also one of the best times to consider investing in India, especially in manufacturing, because of the policy changes introduced by the government. So as you may see from this slide, overall, there has been a considerable reduction in the tax rates, and depending on which turnover bracket you fall in, the tax rates may vary from 26% to 35% for a domestic company. But most importantly, what we wanted to highlight is if it's a new company, if you set up a new company that is after 1st of October 2019, and if you start commencing manufacture before 1st of April 2023, that's the window that has been provided, then the tax rate can come down to as low as 17.16%, which is one of the lowest corporate tax rates in the entire region. And that is, as you may see, that is basically to boost the manufacturing in India and to encourage new companies to come up and set up their base here. Even if somebody is not a manufacturer and say they are into trading or they are into services, the tax rate can be as low as 25.17%, subject to certain conditions that you have to forego certain exemptions and concessions. But again, those exemptions and concessions in many of the cases are already redundant and may not be of much use. So in all likelihood, you would end up opting for this 25% concession rate. So that's a major reduction which India has reduced. Then one more very important change that has come about, which should be highlighted, is regarding the dividend taxation. So previously, India had a dividend distribution tax of about 20.56%. So any dividend paid out by the Indian company to the shareholders, whether Indian shareholders or non-residents, was subjected to this particular tax in the hands of the company distributing the dividend. Now, this posed a lot of challenges, especially for non-residents, because whether the non-resident will be eligible to avail the treaty benefit, the concessional tax rate available under the treaty, was a big subject matter of litigation here. And though there are some rulings which have come in favor, but still the matter is far, far away from resolution. And it was posing a big hurdle to the investors. In 2020, the government decided to change this particular system. And now they have switched over to the normal way of taxing dividends, whereby the dividends will be taxed in the hands of the shareholders. And if there are any non-resident shareholders, for instance, if it's an Italian investor holding more than 10%, then the tax payable will be at a concession rate of 15%. And obviously, there will be any dispute on this. So they have definitely tried to make the investments into India easier, and then less of litigation on this front. Now, apart from this, I would also like to highlight that there have been a lot of reforms as far as the tax is concerned, even on the procedure, even on the compliances, etc. And apart from the fact that India introduced goods and services tax, which kind of introduced a common taxation system across various states, and also introduced a lot of reforms in the customs, the way the assessment is done, the way the clearances are done, the speed at which the clearances are done, etc. What I'm going to highlight here is regarding the assessment and the appeals under the income tax. A scheme of faceless assessment or an electronic assessment, where the all the proceedings right from the beginning till the appellate stage will happen online. All the communications will be exchanged online. Even the hearings will take place online. But most importantly, instead of one individual officer sitting and doing the assessment, which can obviously bring in a lot of buyers. Now they are introduced a team assessment. So it's not one officer, but it will be multiple officers doing different legs of assessment, which brings in a lot of objectivity, also takes away the bias. And the chances of some very, I would say, skewed kind of a interpretation being taken by one officer gets ruled out, because it's always subject to review. So these are the reforms which have been introduced, which definitely is going to increase the ease of doing business as we go forward. I think with that, I would like to conclude my presentation. Thanks for the time.
Over to you, Lugi.
Thank you very much for your precise, technical, but nevertheless highlight presentation. Yes, now I'd like to give the word to Sanjay Malhotra in order to finalize the word from India. Please, Sanjay.
Thank you, Mr. Belluzzo. Okay, I'm Sanjay Malhotra. I'm actually manufacturing automotive components, having plants here in India and manufacturing plants as subsidiaries in Germany, Poland, and in US. Today, I'm here as a part of ACMA. ACMA, as you know, is the Automotive Components Manufacturers Association, established about 60 years ago, with 800 odd members and representing about 85% of the turnover of automotive components. I will run through these much faster. Tell you a little bit about the auto component industry. Of course, this COVID year has been a bit of a misnomer, but otherwise, some of the key highlights of the year have been that we have still managed to come out of all these problems. We are struggling a little bit with commodity prices having gone up and rupee also losing some value. The aftermarket also saw a dip because of the COVID. But despite all of that, we have managed to reduce the balance of trade, or the deficit of trade, I would say, because it was at the peak time roughly about 1.5 billion, and now it's down to roughly 500 million. So this clearly shows that the dependence on imports is going down, and it's more and more products that are being produced here, as well as what is augmenting the production is the exports from India. There we are. So most of this is driven by what is called the Atmanirbhar Bharat scheme, or what we also call Self-Reliant India Mission, and some people call it the Make in India Mission. So the government is pursuing this goal relentlessly, trying to produce more and more. We heard this from Mr. Lakshmi Kumaran earlier, how the import duties have been raised to encourage people to produce. Here we're talking about a fact that a lot of incentives have been provided in the last few years, more or less $300 billion US. It's a lot, it's a big number to encourage companies to produce here in India. Some of the key announcements that came in the Atmanirbhar Bharat, or the Self-Reliant India, were the government reforms that have come through, including some border limits have been increased and some public enterprises have been privatized. Very, very specific measures for the MSME, because the government sees the strength in the MSMEs, very much like what we see in Italy, and also for that matter in Germany, the Mittelstand as they call it. Also dispute resolution, insolvency resolution, all these are things that are helping people or companies to produce in India. This is benefiting various sectors, including the agricultural sector, the defense sector, where the government is again going all out to find a way to produce more and more defense equipment in India. Housing, of course, especially low-cost housing, and also this is supported by Reserve Bank of India, the Central Bank of India, to ensure that companies that actually add value in India are strengthened, and they have a distinct advantage over companies that are simply importing into India. So one of the things that government came up with a few months ago was what's called the PLI scheme, or the Performance Linked Incentive Scheme. The government expects this to be a game changer in the global perspective or the global perception of doing manufacturing in India. So a lot of allocations have been made in this respect. You're seeing that this scheme has been specially rolled out for specific industries. One is the automobile and auto component industry. Second is the pharmaceutical industry. The third is the battery industry, coming from the transition towards electric vehicles. Also the telecom industry, where they want to reduce their dependency on imports. Then the food product industry. We are a country of 1.3 billion people, so food is very important. Textile industry, because it has a very large employment base. Steel industry, again, it's coming from the fact that we need to be strong in commodities. White goods, to reduce the dependency on imports. Electronics, yeah, that's the flavor of the season, I would say, because we talk about the chip shortage, the government wants to be self-reliant in these. And solar industry as well, because it's an area that's more green for us, and we are a warm country. They want to use the sun for the right reasons. So I'll talk a little bit more about the PLI scheme in reference to the automotive industry. They have defined champions. So one is an auto OEM champion, means someone who's producing vehicles and wants to come as a champion. And the second could be an auto component champion. I will not go into details of what their numbers should be, but just to explain that the perspective is that they want to create champions. They don't want to create a very complex scheme that has to be administered down at the granulate level. They want this push to come from the top to the bottom, and they want to create these champions who will be encouraged to invest in manufacturing in India, and these champions will drive growth, and they will further get drive down this demand in the next year and further to the next years to improve the manufacturing facility. And what I can tell you as a manufacturer is that the investment cycle was stopped for about 5 to 10 years. But in the last 2 years, despite COVID, we see that there's a restart to the investment cycle, and companies see a lot of positivity in the future. And this is encouraging them to invest more and more in their businesses. So these are the eligibility criteria. Again, I don't need to read the numbers to you, but the fact is that they see the difference in the perspective of someone who's just making two-wheelers, or someone who's making vehicles, or someone who is making components. Also, they're talking about new non-automotive investors. So it could be, it's coming a lot from the Silicon Valley, because we have the likes of Uber who want to invest here. We have similar companies in India. So they have done it in a very pragmatic way to find different eligibility criteria depending on the kind of business that the company wants to enter into. So they are expecting a lot of existing beneficiaries and looking forward to see many new entrants as well coming to India with PLI scheme supporting them. So what is the kind of incentive that the government wants to give? So typically the incentive is about 10 to 11%. At the lowest end, it is 8%. At the highest end, it is roughly 16%. And they feel that these are good enough incentives to encourage companies to come into India. They also have some specific areas like battery for electric vehicles, hydrogen fuel cells, and a few other focus areas where the additional 2% incentive is granted. But again, the focus is on Make in India or Self-Reliant India. So there has to be a domestic value addition of 50%. That's a very important part, and that's something the government is focused on. They don't want to create manufacturers or assemblers who are running what is called in India as a screwdriver technology. They're looking for real deep-rooted manufacturing in India, and that is one of the key conditions for this scheme. This scheme has already been kicked off and it will run for the next 5 years. And there's an incentive limit to what it's about 25% total scheme. That's the maximum that a company can take. So they don't want this to be all rested in one company itself. As I mentioned earlier, batteries and some other areas have specific incentives. They have also defined who the testing agencies will be. Even the aftermarket sales made by these manufacturing companies will be part of their turnover for the incentives. Also, there are some large groups which are making vehicles as well as components. They are, of course, incentivized only one time. So the government, our Ministry of Heavy Industries, that's rolling out these incentives, have rolled out a lot of FAQs to make sure that any questions are answered. As ACMA, we are also able to help Italian companies who want to come to India to answer their questions. These are other details about the window of receipt, but like I said, it's going to run for 5 years. So there's enough time for companies to plan around this. And this is also a stable policy measure that will not get changed in the next 3 months or 3 years. So companies can have a long-term view towards the Indian investments and the business in India. That's it from me. For any further clarifications, feel free to reach out to ACMA. We have champions of our own who know a lot about PLI. And of course, Mr. Lakshay Kumar himself and his company know a lot about this. We are happy to find ways to support Italian companies who want to come to India and start manufacturing. Thank you, Mr. Belluzzo.
Thank you. Thank you, Mr. Malhotra. Thank you very much for your presentation, which is high level but deep in real market and industries. As you know perfectly, north of Italy and south of Germany are the bulk of the automotive industry in Europe. And we have a lot of clients in these sectors. And I know that there are already stocks. As you know, the texture of Italian company is small and medium size, but very focused in their niche and very internationalized. So basically, I believe that this is one of the sector where we can check and see for opportunities.
Absolutely.
So now, in the last half an hour, we will concentrate the vice versa. So inbound to Italy, outbound from India towards Italy. So I leave the floor to my partners and colleagues, Walter Andreoni, and then to Enrico, and then to Andrea. Please, Walter.
Thank you. Good morning or good afternoon, everyone. I hope the moment you may see the presentation we prepared. So just one thought for the introduction. I'm very happy I heard from the institutions and public officers' speeches at the beginning one common point, and the common point I took is there is no stable and healthy growth inside a country unless you are not able to attract foreign investments. And this was a bit the aim of our presentation, and we wanted to present six in this let's say first part, 6 points, 6 measures which Italy introduced in the past and changed in some cases just a couple of weeks ago in order to continue or to boost the foreign investments. One of the first point and first, I would say, measure I would like to mention is the patent box regime. The patent box regime has been introduced in 2015, and I say, unfortunately, from let's say advisory point of view, and also from the macroeconomic point of view, has been changed in the last couple of weeks, and it will start the new regime from 2022. We are moving from a profit-based incentive to a cost-based incentive. And what does this mean? First of all, the patent box, as you may know, is a regime which is incentivizing income coming or stemming from intangible assets. In the European Union, patent boxes started to be implemented 6-7 years ago, and from an economic point of view, we immediately understood that it was a strategy which was, of course, giving a boost to the investments, but at the same time was introducing a pathology. That's what the American will call beggar the neighbor activity, so that you if you introduce a patent box, unless it's better than the other one introduced by a country which is close to you, it's never going to work. So we saw this trend of having patent boxes, incentivizing more and more. And this is something that also at the OECD level has been considered not okay. And that's why Italy this year, unfortunately earlier than other countries, decided to move from a profit-based to a cost-based incentive. Frankly speaking, I'm waiting for other European countries to move as well to this new methodology of incentivizing the cost in the intangible because of this trend. So thinking of what will happen from January on, the patent box which will be available is a kind of super deduction which is granted from the Treasury for expenditure in research and development. So if you spend 100 in this kind of investments, in creating intangibles, then you get not only the deduction of this cost, but you get a plus of 90% of this cost. This, let's say, it's like giving a premium to your investments in the creation of intangible. The change of technicality in calculating the incentive, it's not only a purely technical activity, it's really a change of mindset. Patent box before was really incentivizing already profitable intangible. So it was giving a prize to companies which already created valuable intangible. So if we look at the new system, for a company which will start an activity in Italy, probably a cost-based incentive is better, because when I start, I do not have a valuable intangible there. I need to create it. And if I create it before it starts giving income, it will take long. But in the meanwhile, with the new system, I can start getting hyper deductions. So let's say if I would like to incentivize all the intangibles, probably the system we had before was better. But if I would like to attract an investment from abroad, this kind of incentive can be, let's say, evaluated as sufficient, as a good one. I don't go further in more technical details on this, but I wanted really to give you the flavor of this change and what will be available next year. Another way of incentivizing the research and development activities was already in place with the old patent box regime, and it was also possible to cumulate the two regimes. Now the new patent box and the tax credit for R&D is, let's say, it's a choice, or you choose to apply one or you apply the other. Anyway, eligible taxpayer are, of course, Italian resident companies or permanent establishment of foreign companies, and it's incentivizing the costs you bear for basic research or applied research or experimental developments. There is a full list, and for different kind of activities you do, there is a different amount of tax credit. The tax credit works differently from an hyper deduction, because you calculate the credit in terms of taxes you are going to pay at the end of the year. And maybe from this slides you may understand better the caps as well, that I will explain later. And what's good about this tax credit, which is a tax credit which doesn't go only against the corporate income tax, because it may happen you invest, you spend money in developing R&D, and then you are in a loss position. And if you are in a loss position, you do not have corporate income tax to pay. So you say, okay, I got a credit, but I do not know how to use it. But this kind of credit can be used horizontally, for example, also to pay social security contribution that the employer need to pay for the employees. So let's say it's a credit that it's always possible to use. In these slides, I just wanted to underline the different kind of R&D sectors where I can invest the money, and you see that for the R&D, the classic R&D to develop an intangible, you get a rate of 20%. And this is calculated over a cap of 4 million euro expenses. This will last till the end of 22, and then the percentage will diminish to 10% till the 2031. On innovation technology, the rate is 10% till 23, and then will diminish to 5 till 2025, and the cap of the expenses which will give credit, it's 2 million per year. And then you go further in other different aesthetic and innovation and design. For example, in Italy, it's quite important. Design is one of the sector where we have a lot of R&D. Also for a foreign company, this could be a very interesting sector to work on. And then the digital and innovation ecological transition, this would be the future. So of course on this they understood it's R&D expense where they can give a prize to foreign investors, and the rates are 15% to 2022, 10 to 2023, and then 5 to 2025. This is the other measure I wanted to mention. The typical way, and we saw it also from the presentation made by the Indian side, we see that the investment in the country is basically through a subsidiary. Possible to use a permanent establishment, but as we all know, to manage tax-wise a permanent establishment is not always an easy task. So unless you are working in the financial sector where it's typical the operation, the international operation through a permanent establishment because of regulatory reason, you use a subsidiary. So I wanted here just to make everyone understand how the passive income can be repatriated to India, for example. So if you have an Indian holding and then an Italian operative subsidiary, the dividends may suffer an ordinary withholding tax of 26%, but because we signed a treaty in 1995 between Italy and India, this withholding tax can be reduced to from 15 to 25, depending on the holding. If the Indian company holds more than 10% of the Italian company, then the withholding tax rate is reduced to 15%. At the same time, interest streams are also subject to a 26% withholding tax rate ordinarily, but under the treaty, this withholding can be reduced to 15. For royalties, if an Indian company is licensing some intangible to the Italian company pays royalties, suffering in this case a withholding tax of 30%, which is the ordinary one, but can be reduced to 20%. I didn't consider the routing of this investment through other countries. I'm sure there can be the possibility to do something on this. Of course, it's a more complicated tax planning exercise, but I think this at least gives an idea of what may happen when you make an investment in the country and then you need to repatriate the profits. My part of the presentation.
Thank you, Walter.
So I don't know if.
Thank you, Walter. That was very clear, and that's why we were thinking and discussing also earlier on about legal and tax structuring, because as I stress, underline once more, you can invest in Italy through European countries. So it's very important to address the investor to Italy on several issues. One of these is a tax issue, the other one is a legal, and of course there is a business-wise. So I leave to Enrico to conclude. Just pay attention that we have not a long.
Walter, you can keep your screen so we can shorten the process of connecting.
I will follow.
Thank you very much. Thank you, Walter, and thank you to all speakers and participants. Of course, just to go ahead with other three important attractive measures for investors, domestic, and also, of course, in this context, foreign investors like Indian companies. The tax credit for new investments, or what we call it in the past, the last years, super and hyper depreciation, because I think it is a similar process to what Walter described for patent box, because up to 2020, up to 2019, a general boost for investments was made in the form of a higher depreciation rate with respect of the cost sustained by the company for certain investments in fixed assets. Now from 2020 on, this benefit has been transformed, has been moved to a tax credit for new investment. So it is more, I would say, it is more financial related. So there is a direct tax reduction on the amount calculated on the amount invested. The eligible taxpayer is quite large. Because resident companies are eligible for this benefit, and Italian permanent establishment on foreign companies, of course, not involved in insolvencies or other violations. And it is very interesting, the panel of the fixed assets who can have access to the benefit, a very, very large panel of fixed assets, ordinary, what we call ordinary, tangible and intangible fixed asset, and externally purchased or also internally manufactured. That is quite important. Ordinary, tangible and intangible fixed asset means a very large area of investments that can be made by the company. The only excluded fixed assets are some specific items like real property or motor vehicles that are of course important investments, but not the investments that the law would like to help. What is also interesting is that the benefit for these investments is higher in case of high technology, tangible and intangible fixed assets. what we call in Italy Industry 4.0, even in this case purchased or internally manufactured. High technology means a specific list of investments in goods where the interconnection with the internet and the several parts of the investment is important, and this has a very bigger amount of benefit. The tax credit has some limitation. Can be used by the companies only through setting off with other tax debts. So there are no refunds in cash provided in this case, and it is possible to use it only in 3 years, not immediately, divided in 3 years. Walter, you can go on to the next slide. Here we can see very quickly the amounts of the benefit granted by the law. For the ordinary tangible assets, for example, the rate vary from 10 to 15%. It is interesting to note that the 15% is granted in case of investments in equipments to help the smart working procedure. And this, of course, was helpful for the recent COVID pandemic. Ordinary rate is 6%. Ordinary rate for the ordinary tangible assets, with exception of the good one, is 6%, and there is a cap of 2 million amount of the investment. Ordinary intangibles means patents, trademarks, where the rate is ordinary for 2022 is 6%. It was 10%. So it is going to be reduced by the government at the moment. For the high technology, tangible as intangible, the rates are very interesting. They go from 50 to 10%, depending on the amount of the investments, of course. and for 2022, a bit lower, from 40 to 10%, even from investments from 2.5 million to up to 20 million. So the tax credit is related exactly as a percentage of the amount of the investments. I would say that the mechanism is quite simple and can be, of course, and this can help investors to get the benefit. Another important, you can go ahead to the next one. another important measure in Italy, and not only in Italy, of course, are all the provisions that help the startups companies. Provisions for startup companies are mainly tax provisions, so tax benefits in case of startup companies incorporated, labor law benefits, and also corporate law benefits for the startups. Even here, the eligible companies are Italian. Eligible companies are mainly Italian EU resident companies. The requirements are to be defined. The startup company is an incorporation, of course, not older than 60 months. So it means a new company, a company that is not traded in a stock exchange market, a company that has a small, at the beginning at least, turnover. And of course, the most important requirement is a company object where the production or trade of products or services in the high tech sector. And these are the main requirements to be defined as startup. The tax benefits for the investors, they can deduct 30%, basically 30% of the investment for their personal tax or corporate tax. That is quite relevant in this case. And the other side of this benefit is that any kind of employment or professional income arising as also a fringe benefit for the assignment of shares is exempt of any tax, personal tax, and contribution. And also it's important that there is a capital gain tax exemption for natural persons, in this case, for natural person, a capital gain tax exemptions in case of sale of shares of startup company. So it is a very large panel of benefits for this kind of companies. Also, corporate matters are important. There are easy requirements to cover losses in the first years of the activities, and also other importance. The last, I would say, sorry, the last kind of investment is a very new, I would say, quite new kind of benefit. The process started in 2017 with the creation of this specific special economic zone, SACE in Italian, that are mainly based in the south of Italy. And also in this case, at least theoretically, the benefit is quite simple. Corporate tax reduced to 50%. So now ordinary rate of corporate tax in Italy is 24%. It will be then reduced to 12%. Very important are also a lot of administrative simplifications provided by the law to initiate the business, that in Italy often are a quite relevant constraint for foreign investments. So not only taxation, but also bureaucracy is a very important matter for foreign investors. So the promise is that it will be very simplified. And I would close my presentation. Thank you very much.
Thank you very much, Enrico, also for being so quick and so detailed. Well, last but not least, we go now to a very important side of our firm, which is the legal side. And before leaving the word to Andrea Greppo, basically, as you can see, I talk to the people attending to this meeting, it is very important to discuss the project well in advance, both on legal and tax side, in order to structure it in a way to carve out efficiency from a territory like Italy, which is really an interesting place to invest. So now the legal side, Andrea, please.
Thank you, Luigi. Good morning, good afternoon. In my speech, I will try to outline in very few minutes, we are late, some aspect of the Italian company law that may be of interest to foreign investors. In particular, we will see, just a moment to change the slide. We will talk about the main legal entities under the Italian company law, M&A and private equity transaction, the foreign direct investment rules, the so-called golden power, and the compliance. Okay, let's start by saying that there are two main categories of legal entities in Italy, which are partnerships and companies. You can see in the slide all the forms that they can take. The main difference between the two categories are related to the legal personality and the segregation of assets and liabilities. Partnership have no legal personality, and the stakeholder have unlimited liability for company obligation, while on the other side, companies has legal personality, and the stakeholder have very limited, except in limited cases, as a limited liability for the company's obligation. Those differences make the partnership more suitable for small businesses, while the companies are generally used for large investments. So we will focus on the companies, and specifically on joint stock company and limited liabilities companies, which are the most interesting for investment, for the foreign investment. In this slide, you can see a comparison between some aspects that are characteristic of the two categories, and which allow us to understand which are the differences and why the limited liability companies are becoming more used also in recent years to constitute and to incorporate in Italy large companies, while they were traditionally used only for small companies with a very important centrality of the quota holders. The reasons are easy to explain, because if you see the minimal capital, the LLC has 10,000 euro of minimum corporate capital versus the 50,000 euro for the SPAs. And consider that for simplified SRLs, the minimum corporate capital may be also lower. But the more important aspects are related to the corporate governance structure, because the LLC may lower a much more flexible structure. Consider that in alternative to the board of directors and the sole director in the SRLs, it is possible now to have form of joint and disjoint administration by two directors, which are very appreciated by investors. It is not generally necessary, it's not mandatory to have a control body. There are exceptions, of course, provided for by the law, but generally we can say that it's not mandatory to have the control body. And also the quota holders meeting can be replaced now with written consultation procedures that are very flexible and may be used to be very efficient in the management of the company. Finally, the SRLs may issue debt securities similar to the bonds. And so we can understand from this that they have a characteristic that give advantages very similar to the SPAs, but allow a greater flexibility, and the costs are lower. So this is very attractive for investors. Only a few words on the incorporation, about the incorporation procedure. As you can see, it's very, very easy. It's necessary to draft the memorandum of association and the article of association. Then a registration with the VAT office is required. And also, if the director are foreigners, they also must have, they must also apply for Italian tax code. And finally, the enrollment in the trade register. For this, for the incorporation, the cost is very low, except for capital contribution. Of course, the expenses are limited to the assistance of public notary when required, and to legal and tax advice. And the entire process may take from 2 to 4 weeks. M&A and private equity transaction. I will be very brief about this topic, but just to say that we all know that transaction involving existing companies may be carried out through share quota deals or asset deals. Those kind of deals, both share and quota and asset, are generally not subject to investment barriers. However, consider that, and we will talk later about the golden power, they may be limited by the FDI rules in Italy. Another very important aspect is that if the turnover of the undertakings involved in the acquisition exceed a certain threshold, a prior notice of the transaction must be given to the Italian competition authorities or to the European Commission. The relevance of the brownfield investment it's shown by the number that you can see in the chart. Consider that only in the first half of 2021, there were in Italy 242 M&A transactions for a total value of 2.4 billion euros. And the most important data is that 243 transactions were cross-border operation for a total value of 32 billion, and it was equal to the 76% of the total value. So this is an aspect that allows us to understand how important is the M&A and the private equity as a brownfield investment to enter the Italian market by the foreign investors. We talked about before about the golden power. What is it? Is a special power of the Italian government to limit or stop foreign investment or corporate transaction which involve Italian strategic assets. All the transactions falling into the field of application of the golden power must be reported in advance to the Italian presidency of Council of Ministers. The FDI rules were introduced in 2012 and then modified over the time. But it's important to note that they apply to assets of strategic importance in sensitive sectors, which are indicated in the slide. You can see military, defense, transport, water, health, communication, media, data processing, aerospace, electoral and financial infrastructure, critical technologies, and from 2020 also agroalimentary, agro-food sector. Therefore, just to finish about this topic, it's very important for foreign investors intending to carry out an acquisition in Italy to verify before if the target is a company operating in one of those sectors, and to consider the application of the golden power regime. Last point, just a few words about the compliance. Of course, who invests in Italy must obviously be compliant also with internal laws and regulations, some of which, the most important ones in fact, are indicated in the slide. Among them, I want to focus on the legislative decree 221 because it's important, because it introduces in Italy the corporate criminal liability. The crimes which may result in corporate criminal liability are detailed in the decree. However, we can say that they include offenses against the public administration, offenses involving market abuse, money laundering crimes, health and safety on the workplace crimes, and environmental crimes. There are, of course, other, but those are the most important. And the liability of the company may result in a fine up to 1.5 million euro, but for multiple crimes connected to the same underlying action, the fine may increase up to 4.6 million euros. And the most important thing is that there are other penalties that may endanger the survival of the company, such as the suspension or revocation of authorization, licenses and concession, the exclusion from public financing and grants or subsidies from the government, and most important, a permanent operating ban. So this is an aspect that must be considered because it's very important, because it can be a regulation that has an important impact on the company, and foreign investors might consider this point as one of the most important disciplines in Italy to be compliant. I think in very few minutes I've said all. Of course, I am available for any question in the
Andrea.
Q&A.
Thank you, Andrea. And of course, it's not easy to be the last one to speak, but we've been quite good to keep the timing of this event within the 8 minutes that, of course, we were more than happy to accommodate our webinar to host Her Excellence, the Ambassador of India in Italy. And we thank again, once more, the Embassy for the level of cooperation. So there are a couple of technical questions, but I believe we can address, I receive on the chat, we can address a specific answer. In order to conclude, I believe that it is always important to discuss through a webinar, even better if we can meet, and I'm sure that in the next months it will be possible to have a meeting, like we say, with Lakshmi, once in Italy and once in India, in order to meet up and to do something also more concrete than only talking. But if I have to take one thing with me, is that we definitely are before a very interesting time for Indian companies and Italian companies. The two markets, meaning India and Europe, are big and consistent. After the pandemic, I'm sure that there is a lot to do, and we will help on the legal and tax and structuring side, the entrepreneur, to make more investment and to make more activity for the Indian, Italian, European community. Well, so I thank you, everybody, each one of you and everybody, and in particular, once again, the Embassy of India in Italy and the Embassy of Italy in India. Thank you very much for your cooperation. We, being a private firm, we're much more honored to have you on our side, and we try to do our best to represent the best Italy worldwide. Thank you very much for everybody, patience and attendance. Thank you. Bye-bye. The video of this will be delivered to all participants. This was one of the questions. Thank you very much. Bye-bye.
Thank you very much to everyone. Bye-bye.
Bye.